Welcome back to FX Pro Academy. To help you become a better trader and improve your market analysis, I've decided to create a series of tutorials on investment analysis. After watching this series, you may realize you've missed out on significant opportunities. Now, I have a small request to help you get the most out of this series. Each day, set aside 30 minutes to an hour to watch these videos and improve your knowledge. These videos will help you deepen your understanding and enhance your skills. Remember, knowledge is the key to making money, while ignorance can lead to failure and missed opportunities. Only with the right knowledge can we avoid common pitfalls. That's why I'm producing this series of around 20 videos, to share market analysis techniques and insights. The goal is to help you feel more confident in your trading and investment decisions. By the end of the series, you'll be able to select potential coins that can bring higher returns. I'm confident that after watching this series, your mindset will shift dramatically. You'll also become more confident in earning extra income, while minimizing unnecessary risks. Please leave your comments below to provide feedback and encourage me to create even more useful videos. And don't forget to share this video with anyone who might benefit from it. Group leaders can also share these videos with their members. These videos can serve as valuable resources for training newcomers who may not have enough time to learn from scratch. Even beginners can understand and apply this knowledge after watching the series. By doing so, they can generate additional income from the crypto market. Crypto is still relatively new, and we are among the few who know about this market. So, don't forget to subscribe and hit the notification bell to never miss a video. Click the link to receive free resources, including insightful books and tips I've collected for you. Let's dive in and start exploring. Today, we're going to dive into the first lesson. In this lesson, we'll start with the basics and work our way up to more advanced concepts. This approach ensures that even those of you who are completely new to this can easily follow along. Sound good? For those who already have some knowledge, it's a great opportunity to review what you know. So, let's get started. Today's lesson is the first one, and we'll be covering the fundamentals of technical analysis and how to read candlestick charts. Now, what exactly is technical analysis? In the financial world, you've likely heard it a lot. But what does it mean, and why is it important for traders? Technical analysis is the process of analyzing market price movements by looking at past and current data. It's a way for investors to predict future price trends by studying historical and current price behaviors. Technical analysis heavily relies on charts and various tools to identify key price levels and potential price movements. It helps us determine the highest possible price points, the lowest possible points, and whether prices are likely to rise or fall over a given time period. By analyzing these trends, we can make more informed decisions about when to buy or sell. This allows us to make better investment decisions. So, why do we need technical analysis? This is a common question many people ask, especially beginners. Many of them say, if technical analysis is so good, then why are there still poor people? Why do some people still lose money? Right. Well, let me be very blunt about this. The fact is, many people who question why technical analysis is necessary are often the ones who lose 90% of their trades. That's almost a certainty. So, don't underestimate the importance of technical analysis. Technical analysis helps us analyze market trends and the psychology of the crowd. For example, if the entire market is in a downtrend and you decide to buy, if you buy at the peak, you're going to lose. Or, if the market is doing well and people are selling off their assets, and there's nothing left to sell, but you decide to sell at the bottom, you'll lose money. If there are no more stocks left to sell, and you're still selling at the lowest price, you're making a loss? At that point, you should be buying aggressively, because that's when the price is very favorable. In addition to understanding market trends, and grasping investor sentiment in the market. You should also know that even the whales use technical analysis. What are whales? Whales are individuals or organizations that hold large amounts of cryptocurrency. They control vast quantities of coins or stocks. By holding such significant amounts, they can influence the market. They can move prices with their large capital. But even they rely on technical analysis. They use it to make decisions and to release both positive and negative news to the market. For example, back in September 2017, whales spread the news that cryptocurrency was banned in South Korea and in China. This caused widespread panic, and people sold off their assets. They spread bad news right when the market was already trending downwards. They intensified the negative sentiment so that people would panic and sell off more. At that time, Bitcoin was at a peak of around $4,800, and the market started to drop to around $2,900. During that time, negative news spread and the market reacted with panic selling. They pushed even more negative news to further drive the market down, and when Bitcoin hit $2,900, they began to accumulate at the bottom. As you know, by the end of 2017, Bitcoin was trading around $7,300 to $7,400. So, it had more than doubled in just a few months. Many people think Bitcoin is just a bubble, but it's not. After this course, you'll understand many things. Technical analysis helps us make decisions to buy when prices are favorable and to sell when the market is trending down. It also increases our chances of success in trading. Many people claim they win every trade, but that's just not true. Even the most professional traders, even the whales, don't win every trade. No one can consistently buy at the bottom and sell at the top. They win some, and they lose some. Successful traders win 7 or 8 out of 10 trades, and they lose on 2 or 3 trades. As long as they win more than they lose, they are successful. Technical analysis increases your chances of success. With good skills, you can raise your success rate to 80%. A 70% win rate is already excellent. Some experts can achieve 90%, meaning they only lose 1 out of 10 trades. Alright, next, we'll move on to the second topic, which is about what price means. This is fundamental theory that you must know. So, what is price? Price is the core factor that every investor focuses on. In investing, the primary concern of investors is the price. Every type of chart represents price levels, through which investors can grasp market conditions. By looking at the charts, investors can observe the price at different points in time. This allows them to understand whether the market is trending up or down, and the main focus for any trader or investor is whether they bought at a profitable price. The goal is to buy low and sell high. Price is what they care about the most. For example, the price of a coin at any given time is when buyers and sellers agree to a transaction at a price they both find acceptable. The buyer believes that the price will continue to rise, so they buy in, expecting to sell at a higher price. Meanwhile, the seller believes the price will drop, so they lock in their profit and plan to buy back at a lower price. This is how buyers and sellers create a transaction. For instance, Bitcoin is priced at $8,000. Someone is willing to sell at $8,000, but you want to buy at $7,000, so no transaction is made. However, if the seller agrees to drop the price to $7,000, or if you agree to buy at $8,000, then a transaction is completed. Simply placing buy or sell orders does not create a transaction. So, if someone buys at $8,000, the price at that time is $8,000. If they sell at $7,000, then the price at that time is $7,000. Price fluctuates continuously and forms the chart. Alright, the price you need to focus on is the opening price, the highest price, the lowest price, and the closing price. The opening price is the first trade of the evaluation period. For example, in a 30-minute evaluation period. During the first 30 minutes, in the first second, when a transaction occurs, the price at which that transaction happens is called the opening price of that 30-minute period. Do you get it? Let's move on. The highest price is the maximum price during the evaluation period. That is, during those 30 minutes, what was the highest price? That price is called the highest price. On the flip side, the lowest price is the lowest price during the evaluation period, and the closing price. The closing price is the last trade of the period. For example, in a 30-minute candle, the 30-minute cycle ends at minute 29. At minute 29 and 59 seconds, a transaction happens. The price of that transaction is called the closing price. Alright, next we'll move on to the third part, which is about candlestick charts. To perform technical analysis, you need to be able to read charts. There are three common types of charts in the market: line charts, bar charts, and candlestick charts. Each type of chart has its own advantages and disadvantages. However, candlestick charts have been the most widely used for many decades now. For the past several decades, candlestick charts have been the most popular in financial markets like stocks, Forex, and, recently, cryptocurrencies. Even in the newest markets like crypto, people still prefer candlestick charts. Candlestick charts convey a lot of information. As you can see here, this is a chart. This is a line chart, also called a line graph. It's just two straight lines like this. It doesn't tell you much. A bar chart, well, the bar chart tells us more than the line chart. It shows the highest price and the lowest price. And here is the candlestick chart. As you can see, in each area, it forms a bar that looks like a candle with wicks. To become a successful investor, learning to read candlestick charts is essential. If you don't believe me, ask any seasoned investor. They all know how to read candlestick charts fluently. I'm not exaggerating when I say those who master candlestick charts tend to be highly successful. In fact, they might not even need any other technical analysis tools. These are the professionals, the top-tier investors. However, this applies mostly to the stock or Forex markets. In fast-moving markets like crypto, things are different. In the crypto market, where prices fluctuate rapidly, you'll need more than just candlestick analysis. In addition to candlesticks, you must also use other evaluation tools. These additional tools are what we'll cover in future videos. Keep watching, and I'll show you how to evaluate charts and trends. We'll discuss different tools, from basic to advanced. I'll cover everything for you. So keep watching the videos, and with enough practice, you'll become a great investor. Candlestick chart. I've been explaining a lot of theory because you need to understand that we have to start from the basics, from the foundation. Only by building from the basics to advanced knowledge will we fully understand the core concepts. If you skip to the advanced part, you'll only grasp the surface level, and you won't understand the essence of it. Right. So, what is a candlestick chart? A candlestick chart was first developed in the 1700s, during the 18th century, by a Japanese rice merchant named. He was a rice trader. He used this chart to analyze rice prices. He noticed that, each day, rice prices would start at an opening price, and during the day, the price would reach a high point and a low point. At the end of the day, the price would settle at a closing price. He recorded this data every single day, and eventually, he discovered a pattern. It formed a chart that we now call the candlestick chart, following a certain logic. He used this chart to predict future rice prices. Based on these predictions, he would decide whether to buy more rice or sell his rice. Although this chart originated in Japan, it was Steve Nissen, the person in the image you see here, who played a major role in popularizing the candlestick chart. He's also a master of using this technique. Steve Nissen brought this chart to many people and highlighted its benefits. This is a Japanese candlestick pattern. As you saw earlier, the candlestick chart is made up of individual candles called Japanese candles. Each candle shows the highest price, the lowest price, the closing price, and the opening price. The candle consists of two parts, the body and the wicks. The upper wick is also called the shadow. A green candle represents a price increase, while a red candle indicates a price decrease. For a green candle, the opening price is lower, and the closing price is higher. This means the price increased from the opening to the close. It represents a price rise. On the other hand, if the opening price is higher, but after the session, the price drops, falling below the opening price, it indicates a price decrease. That's a price decline. Exactly. Now, this is a standard candlestick. It has a body and wicks, also called shadows. The candle consists of a body and shadows. This is a complete candlestick, but there are also other unusual candles. This is a Marubozu candlestick. It means the closing price and the highest price are the same. The opening price and the highest price are the same. Or the lowest price are the same. Similarly, the opening price and the highest price are the same, and the closing price and the lowest price are the same. This shows that buying and selling pressure is very strong. Exactly. This indicates that prices are likely to move in one direction in the future. For example, the opening is here, the closing is here, and this Marubozu candle is solid like this. It suggests that prices in the following periods will rise strongly. Similarly, if there's a long Marubozu candle like this, and the closing price is right here without any wicks, it means that in the next session, the price will continue to drop. And people use this basic knowledge to predict future prices. Instead of rushing in blindly to buy without reading the chart, they rush in to buy without considering the price. Thinking it has dropped, they assume it's the bottom and buy, but they don't realize that the price could drop further. Many people lose money this way. A lot of people message me saying, "I just sold, and the price immediately went up." Or "I just bought, and the price instantly dropped." It's kind of funny. You buy, but you don't analyze the market sentiment or the price, so that's exactly what happens. There are also candlesticks that, for example, only have an upper wick or a lower wick, without the body of the candle. These candles also indicate strong buying pressure and a significant decrease in selling pressure. Additionally, we can also see some very unique and unusual candlesticks, such as the Doji candlestick. The Doji has a wick, where the opening and closing prices are equal, which forms a horizontal line like this. The opening and closing prices are the same. There are many different types of candlesticks. In the following lessons, I'll create about 3 videos on reading candlestick charts. Reading candlestick charts, I believe, is one of the most important lessons you need to learn. It's a crucial skill to master. As for other technical analysis tools, each tool will have its own dedicated video. For example, this is also a candlestick pattern, indicating that the price is about to reverse. We need to pay close attention to patterns that signal a reversal. For example, when the price is rising and then reverses to fall. When the price is falling and reverses to rise. Or when it's falling and reverses to rise. It helps us better identify tops and bottoms. In the upcoming videos, I'll go into more detail about other technical analysis tools. To prepare for the upcoming videos, I suggest you create an account on the TradingView website. We will be using TradingView a lot to utilize its technical analysis tools. TradingView is a website that supports technical analysis, and every trader should be familiar with it. So, make sure to create an account there. You can use a free account, but I recommend getting a premium account. The premium account comes with more features, and there are 3 different subscription options. I suggest getting the one designed for traders. It costs about $16 per month, not a one-time fee. So, you'll need to pay it monthly, but don't worry. Once you start mastering your analysis, you'll see it's a worthwhile investment. The $16 per month is a small price to pay, considering the profits you'll be able to generate. It will help you make much more money than the cost of the tools you're investing in. I'll include the link to the TradingView website in the video description so you can easily check it out. Here, you can see the Marubozu candles. These Marubozu candles have very long bodies. They have long wicks, indicating a further downward move. Now, there are different types of candles, like the Doji candles. The Doji candles. We'll be analyzing these candle patterns in more detail in the upcoming videos. We'll end the video here because making it too long can make it hard to follow. Thank you so much for watching. Remember to subscribe so you can catch all of the most helpful videos. And don't forget to click the bell icon so you won't miss any of my upcoming content. Also, make sure to click the link below to get access to free resources, including great books and tips for investing. Thank you very much. See you next time.